You're not focused on just one niche, but you diversify and you look at short-term rental, something you can be a hands-on investor locally. You can still invest at the same time you're looking for opportunities for multifamily.
I'm not trying to reinvent the wheel, but sometimes it's, not every deal is every quarter as expected, right? So we lived there 7 years, sold it for about a double. Knowing them, I want to see if I can follow their model.
Hello everyone, and welcome to the Path of Progress. I'm your host Alex Kononov, and today we have an incredible guest who's built a fascinating journey in real estate investing while navigating a successful career in insurance and law. Joining me is Greg Baxter, an accomplished real estate investor and attorney with over 2 decades of experience, from starting with a small single condo to building a diverse portfolio of active and passive real estate investments. Greg's path is a testament to the power of persistence and strategic planning. Greg, welcome to the show.
Thank you, Alex. Thank you for having me.
Of course, it's a pleasure having you. To start, can you tell us a bit about your journey? How did you go from practicing law and working in insurance to building such a strong presence in real estate?
Yeah, sure. My journey, I think it's kind of like a marathon. It's been kind of and the way I run that one marathon that I did was kind of slow, but I got there eventually, right? So slow and steady is the way, I've kind of gone about it. Started out in 2004 with the first purchase of an apartment building. An apartment. And then from there, a couple years later, leveraged a HELOC to get into my first single family home, which from at that point, got into a few years later, I got into some syndications, which I've done some, various group investments, and just kind of built it slowly but surely. It's kind of, it's been a long process, but, obviously there's other people that go about it much faster, but I think everybody has their own journey, and you go at your own pace, and, I think getting in front of people, getting around people in real estate, such as yourself and others, I think it helps to further that journey.
I think it's all about the progress, right? You showed that you had a great progress starting from one building, going to syndications, and it's tremendous success so far. But we love to explore the turning points and that defines someone's journey, especially when you started your real estate while doing all this stuff. What was your turning point, some event or moment that inspired you to dive into real estate investing?
I think early on, I was looking back. This was 2004, buying the first place. That was when everybody was going into the office. Everybody needed to commute to. I was going into New York City, as was my wife. We were out in the suburbs with a long commute. We were looking to buy. Hoboken was kind of priced out for us. So we looked at the next best option, which was Jersey City. And we found a place that was close, that was right on the transportation rails. And so it was literally in the path of progress. And so that was a great place to begin the journey. And from there, we could see from 2004 to 2016, we lived there. And, year over year, we could see the development, street by street, block by block. And so, I think having that knowledge that this place is growing was, important for me in the journey to see what was next.
So you bought your first apartment and you got this real estate bug that everything around you is developing and growing, and you want to jump on this train and to look deeper into real estate. So how did you go from just an apartment to a short sale, which already a little bit more advanced, just buying through a realtor, right?
Yeah, it was, we were looking around, we were trying to find houses. We were about ready to start our family in 2009. And so we were, looking what was available, and what was available in our price range needed work. So the short sale was, it's not for everybody. If you're on a time frame, it might not work for you. But we already had our apartment. We were just, we could wait it out. And that's what you often have to do with a short sale, because the bank has to approve taking less on what they're due. Also, the place that we ended up finding, in addition to being a short sale, was kind of half completed. It was a 2-family house that the prior owner was in the middle of converting to a 1-family, and they got halfway through that, and so there was work to be done. And so, that was a problem for most buyers, but we saw that as an opportunity to come in, to make it our own, and to fix it, improve it, and add a lot of value in the process.
You weren't afraid of a challenge. Can you share some numbers? I know it's been a long time, 2009, but do you have some rough numbers, how much it cost you and how much did the closing process? Because short sale itself is a loan, as you mentioned, and I know about it. It's a loan process until the bank approves it, and from start to finish, it can take months or half a year or a year. How long it was for you at that time?
Yeah, I don't recall exactly how long, but it's probably 4 to 6 months to get into it, to get the approval. We bought it for $225 at the time. It was a single family house in Jersey City near transportation, so we thought that was a good deal. And then from there, we lived there 7 years. We put about $50,000 in. The first thing we did was kind of complete the rest of the transition from a 2-family to a 1-family. We also updated the kitchen and put a new electrical panel in. So we were probably into it for about $225 plus the $50 in upgrades. So all in about $275 over 7 years. And then we sold it for about a double, $555.
Wow, really nice. And so you transitioned from 2-family to a single family? Did I understand it correctly?
The other prior owner was in the process of moving it, making it a single family. And that's what we were interested in. That was our primary residence at that point. We were looking to start our family. So that's what worked for us. I know that's not typically what a real estate investor would do. They would probably want to go from 1 to 2 if possible, or to add a room, which is what I did on a subsequent short sale.
Interesting. I mean, you do what you have to do, and everyone's situation is unique. For you needed to fix your residence, right? And you needed a new home for your bigger family, for your growing family. And you found a solution by finding a house that needed a little work, a little love, and you just made it happen. And I like that you came right in the middle of process, so of someone transitioning to single family. And it's probably not a desirable product for investors, but it's a specific niche that you found that it probably didn't have enough eyeballs on it, because regular investors or regular people who buy their first home, they don't usually look at such properties, right? But people who already invest in, they look for increasing unit amount. So you found a good deal, especially it was a short sale, since it was previous owner couldn't pay for his. Let's talk about short sale a little bit. What is short sale and how it happened, right? And correct me if I'm wrong. For our listeners, short sale is a process when maybe you can chime in when the
Sure.
mortgage balance is more than the current amount, how much they can get for the property and this environment. And what happens? They try to sell the property at a certain price over the mortgage price, and just to make some money or to be break even, and they cannot sell for a long time, and then they come back to the bank and say, hey, we cannot sell the property. Can we reduce the price of our mortgage balance so we can be clear with you and still sell the property? And the bank is looking on the current situation of the environment, and they decide if it's a go or not go for them, correct?
Yeah, but it's basically it. The bank is going to end up taking a bit of a haircut on what they're due from the person that's selling it, but that seller gets to walk away from that mortgage that he had that he's underwater on. So yeah, so it's a bad situation for that person, but for us as the buyer coming in, it worked out. It was a deal for us.
For sure. I mean, I think it's a win-win for everyone, because environment changed and prices drop. So the banks let go the assets they didn't want to have on the balance sheet. The seller walked from the deal, and he was still okay with the bank. He didn't go through bankruptcy, and you guys were able to find the property in your price range, and you made it a nice home, and you still made a profit on it. Okay, so after you're done with this property, what was your next step in real estate?
So yeah, really the next step was, I had a friend of mine, an accountant who I went to Rutgers University with, and a fraternity brother. We were talking, we were trying to get together, and we were thinking about, we had a little bit of money. We've been working for a number of years at this point. Hey, maybe we could get a group of us together and buy something in New Brunswick. Maybe we could buy something and rent it out. So we started kind of down that process. We had kind of the outline of that. That never actually happened, but my friend who was working for an accounting firm had one of his the people that he worked with approach him, said, hey, we're actually syndicating a deal out in Colorado. I think it was a 12 or 14 unit property. They said to him, would you be interested in investing with us? And so we saw that as a passive way of of getting into real estate, as opposed to actually buying and managing something ourselves as a group. We went with that. The first group that we had was 7 of us putting in $5,000. We were just a small part of the syndication. I didn't know what a syndication really was back then, but for $5,000, I was willing to give it a shot. it sounded good on paper, and so we went with it, and it was a real success over years and years, actually.
I love it. So, in your experience of investing passively, would you recommend for people to start investing passively right from the bat, or maybe look for more active side of investment?
Yeah, I mean, I think it's I think you have to know yourself and what you're interested in. So, if you maybe if you have the skills to, you're a handyman, you have some kind of building type skills, maybe getting into something, fixing and flipping, maybe you can do that a little more actively. But if you're a high paid salaried employee somewhere, and you've got time constraints, maybe family, maybe it's a little harder to get into something that you're going to be able to make happen on the side. So that might be the better place for the passive investor.
I agree. It all depends on the personal situation and the level of income that you can produce. If you have W-2 high demand job and you're busy at work all day, right, and you want to spend time with your family on the weekends, then you have to look for alternative ways to invest in real estate. And this is how we do in passive investing, right? If we invest in it doesn't have to be syndication, right? It can be just a GV project with one investor or two investors, and it's a collaboration of a few parties that want to make it happen. Even having a passive role, it could be semi-passive, right? Not only you just give your money and you don't do anything, but you also can take one of the more active roles, like helping with some supplies or understanding the books or help with insurances, which is your superpower, right? And you probably can understand better than others the difference in insurance claims. It depends on what specifically you're doing. But again, you have to understand your superpowers, your best ability, how you can contribute to the team to get it to the finish line. But if you are just starting and you don't have time to do it on your own, it's not a bad idea to do it with other people and utilizing your funds for it.
Yeah, 100%. Partnerships can work, but it's good to know who you're investing with, who those partners are, and making sure that you're balancing out your skills so that you might have one set of skills and your partner has a different set of skills that are not the same but are compatible, and you guys are better together.
Yeah, no, for sure. So let's go to the nowadays, right? What does your portfolio look like? How many syndication have you done to date? And what is your real estate exposure overall in terms of just the numbers of how many syndication you're doing, how many you have personal properties, etc.?
Yeah, so in addition to my primary residence, I have 2 apartments, also 1 single family house that's a rental. And then I have about 20 syndications that I'm in, varying values. And so I've had a couple of sales recently, so I'm looking to probably reinvest some of that money, in 2025.
Wow. And how long did it take you to build a portfolio of over 20 syndication? 20 syndication sounds like an impressive number. It's been participating in so many different projects. You definitely know what's going on there. I know you from active side as a real estate investor. I know you wouldn't be 100% passive on most of the deals, but how do you manage that, and how did it come to that point? How long did it take you?
Yeah, I mean, I think as I said, I got into the first syndication in 2012. I think it took a few years for me to realize that the power of it, and really by 2018, 2019 was when I really started to do the deep dive after seeing the results that we've gotten. So I was listening to the podcast, reading the books, getting out to meetups. So 2019 was when I kind of I started refining some of my properties to get capital out and to reinvest that in syndications. At that point, 2019 to 21, at very low rates, so I was able to lock in fixed rate debt at low percentages. And then just leverage that to put into all these other syndications. So I was finding different operators to work with, and just really kind of continuing on layering it, year over year from 2019 on in particular.
Okay, and how did you find those deals? Did you find those operators, or operators just reach out to you and say, "Hey, Greg, we have a nice deal"? How did you decide in what market did you want to invest? Do you invest all over the US at this point, or you have specific markets that you focused on?
Yeah, it's more so in the South and Southeast. I started with with one of the operators who we all know, who had a meetup in New Jersey in Westfield. So I was going out to his meetups. He would have other syndicators come through, and they're, month after month, kind of teaching us the process about syndications, about passive investments. And so I was able to get to know him there. I started investing with him, and then also getting to know some of the other people that were coming through. I mean, I recall too that there was a 2-day weekend event that I went to. So I was exposed to probably 10, 12 different operators. So I was really kind of taking in what they were offering, what they were putting out there, reading their content, absorbing their podcast. So through that, I was able to really delve into and get to know who the operators were in the space.
Yeah, it's very interesting. It looks like you had a lot of success with joint ventures and syndication since you scaled so fast. I like how you took the money and profits from one deal and you recycled it back to the invest, and that's probably how you grow to such a big exposure in syndication. What will be your advice for someone looking to partner on their first real estate deal? Is it joint venture, syndication? How do you look at those people as partners, and what will be your go box to partner with those people?
Yeah, I mean, I think you really need to know, like, and trust these operators. So knowing them, the people that are actually going to run the deal, is important. And then on top of that, I think you need to analyze the deal and to see how they're underwriting it. Is it conservatively underwritten, or do they have wild expectations of raising rent 5% a year every year, or are they kind of grounded in more fact, right? I mean, I think over the last couple of years, rents have been nationally maybe flat or even negative in some areas. So what are these guys projecting, and are they conservatively writing as far as an exit cap rate? Are they projecting an exit cap rate that's lower, which means they're kind of like banking on market appreciation, or something a little higher, and so there's some leeway in case the market changes, which over the last couple of years we did see.
So out of those 20 syndications that you participate in right now, you probably had many more offers for participations. So how many, roughly, do you think you had said no to? How many people not to participate in their deal?
Yeah, I mean, it's hard to say, but I definitely looked at a lot of deals, and I continue to look at a lot of deals, and I continue to pass up on a lot more deals than I actually get into. I think first off,
easy 10 times less, 10 times more. For every syndications that you participate, you probably said at least 10 times no, that it's not for you. You won't be able to do it right now. It is not a good place for you. You don't feel comfortable either with a operator or with a deal, or there is some other red flags that you feel personally that you don't want to do it. But I think it's important to highlight for our listeners that it's okay to say no. It's okay to reject even the people that you know. But sometimes if you feel that deal is not right for you personally, if you feel something is way off, not conservative, not on your buy box, and doesn't fit in your criteria, it's okay to walk away. Because sometimes it's much more pricier in the end to have a deal that lost, or that it's stuck in their production, or is in the development phase, and the money that you count on 2 or 3 or 5 year lifespan, now it's going to be in 10 years, if lucky. Right. Yeah,
I mean, absolutely. I mean, I think, saying no, especially that first time around, is probably the best thing to do. I think one thing I would recommend is that, if somebody's offering a deal to get into, you might pass up on that and then just kind of track the progress of it. Maybe ask them for updates on it over the next 6 months, a year, see how it's going for them. And, that way you can check back in and see how it's done and get to know this operator a little more before you put your hard-earned money with them. And that way, you're protecting yourself a little more.
I also think it's important to go through this process, right? Even if you're not sure if you want to participate there, but you got to start educating yourself on that front. How long did it take you to educate yourself before you took on first in syndication? You didn't just jump from short sale to syndication, larger projects. So you just had one small syndication, but participated in the larger projects like 100-unit apartment complexes. How long did it take you to go through this learning curve?
Yeah, I mean, I think it probably took me, a good year of reading up on, reading content and listening to podcasts before I really felt comfortable and going to the meetups before I plunged at 25,000 at that point. So yeah, so I wasn't coming out of the gate and just putting money down on the first deal, but really kind of seeing what was out there before I jumped in.
And I think it's very important to emphasize here we talking about education and saying no, but also going through this process, right? And that's part of your education. My education personally had this part. I went through multiple operating memorandums, that investor decks, just to understand what are the numbers, how does it calculate, what is the industry norm, what is the expectation, what is the usual standard expectation of investor. You don't know this stuff until you start looking at this OMs, until you start looking at this investor decks and going through every single detail of their underwriting, learning this terminology and understanding how much money you can get and what are the risk of investment, right? And then dive deeper into the areas and underwriting neighborhoods itself for separately from the numbers, because numbers is one thing, but neighborhoods and area and development and growth is another thing. And I think it's very important to cover all your bases, but start from the investor relationships, because people want to raise money for their deals. They want your money, they want you in their deal if you qualify, right? It's important. There's accredited investors, non-accredited, depends on your situation, but you have to start somewhere.
Yeah, I mean, and that brings up a good point of, not every deal you're going to be able to actually invest into, because, you might not be an accredited investor at first. So yeah, these are things you start to learn along the way. And there's some good books out there. Brian Burke's got a great book, Hands Off Investor, kind of runs through a lot of these different things to look for. And so, yeah, there's resources out there. I'm actually a member of, it was originally Left Field Investors. Now it's Passive Pockets. It's a part of Bigger Pockets and focus on the passive investments. And that was, for me, a good space too to get into, because there's forums there where people are talking about operators and they have a syndicated deal analyzer, so you can kind of plug in the numbers and figure out, hey, is this kind of coming up green or more red, as far as red flags and things that you might say, hey, step back before you invest in it.
Absolutely, it's funny that you mentioned Bigger Pockets and their branch, right? Because everyone on our podcast, they started their real estate journey with listening to Bigger Pockets podcasts. And now you're going deeper, you're going Bigger Pockets passive investments, right? And that core membership, I love it. So for you personally, Greg, now you tried single family, you tried short sales, and you went right to syndications. Your future looks like, what are you looking right now? Are you looking specifically focused on a passive investor? Do you trying to move into more active role in syndications? Or are you still looking for smaller properties in your area?
Yeah, I mean, I think it's probably a few different things. I'm definitely going to continue on with some more syndicated investments. I see that happening throughout this coming year, and also I'm looking into short-term rentals. I know a couple people that are particularly in the Poconos. I know a couple people that are already investing out there or looking to invest. I'm talking with them. I want to see if I can basically, follow their model, see how it works. I'm not trying to reinvent the wheel, but if I can, model somebody else's success, then I think that could work for me. So, and yeah, I'll continue to, where possible, maybe, get into, if I can, a small multi or even team up with others that are building, buying something, a little bigger.
So I like what you just said. You're not focused on just one niche, but you're diversifying. So you look at short-term rentals, something you can be a hands-on investor locally, not far from you, Poconos, like 1.5 hours, right? And you can still invest passively in some bigger syndications. It's not going to take as much time of your day-to-day life. And at the same time, you looking for opportunities for multifamily. If someone want to collaborate or JV project with you, you'll be open for that. And I love that you are open-minded. And I know passive investment already works for you and have so many syndications, and you have so much success on this part. But you're still looking for something local and be active in the space and grow and develop and get out of your comfort zone, right? And you're still looking for something new. You want to try some another angle to see if you can even get even better results from your investing.
Yeah, I mean, there's so many different ways you can go about in real estate. I feel like I'm just scratching the surface here, and looking to continue to learn. And if there are other good models of success, I definitely want to follow those.
And I know we had this conversation before, but can you mention a little bit about some syndications that you more on the active side? I know you raise some capital and be on investor relationships on one of your syndication, or maybe some of your syndications. And can you share your capacities there and your hurdles that you had when you had to deal with a sponsor and be as a capital raiser and investor relationship a part of the team?
Yeah, I mean, I think it's not always good news that when you're talking about investor relations and kind of putting out the updates. So, but I think just maintaining those levels of communication with the sponsor, with the investors, and getting the updates and telling it like it is. I've been in some deals that have had paused distributions. That's not what everybody wants to hear, but sometimes that's what occurs. Not every deal is a home run, cash flowing every quarter as expected, right? So the operators have pro forma, and you could probably throw that out after 6 months or a year, and things come up, but you have to navigate through them. So it's then that's where the problem solving skills come in.
You have to be active, right? You have to be on point with what's going on. You have to be always updated on the process and progress, and update your investors and explain them why it didn't go this way and what happened in another one. So you still basically live through the process with the main operator, with asset manager on day-to-day operations, and you're part of that operations because you need to know what's going on and give them a hand if they need a hand, but also you need to work on your investor relationships and other investors. But before right, this is operations, and before you have to raise this capital, right? So tell us a little more about that part of your journey, how you transition from passive investor to, hey, I have enough people in my Rolodex that I can raise for this deal and be part of the sponsorship team. So how did you get through this transition, and what pushed you to that point?
Yeah, I mean, I think it was based on the experience, right? So I've been doing it, for a number of years, and I think that helps to say, that, hey, here's a guy who's been doing it for a number of years. He's, an enthusiast into this and wants to continue to learn. And so, it's a relatively small group of people that I've worked with, but they've seen what we've done on some of these deals, and so we're, that sometimes will attract some other people. There's an example, one guy who's invested with us, and we've done well on most of our deals, and so he, his cousin got involved. So, kind of the word of mouth. If things are going well, then people will hear about it, and that's one way that you kind of build that trust, and over time it grows.
I like it. You build your own track record. First, you have your own experience of investing passively. So when you come on board as a sponsor, now as a person who helped to raise capital, you understand the deal from inside, and you understand what demands investors have. When you, as yourself as an investor, you have certain expectations for the sponsor in terms of updates, in terms of communication, right? In terms of feedback and follow-up. And now you got all this experience, and now you transition it to yourself, to your investors that come on board because they know you, and you have trust and credibility in space, and now you can grow it more organically from that position of your expertise and experience and trust. I love it. So tell us a little more about challenges that you experience in some of your syndications. I'm sure it's all of them great, but you must have some roadblocks and bumps on the road. Can you share some of those for us?
Yeah, sure. I mean, I think it'd be great to be able to say that every deal was a huge success, but I did have a couple of deals that didn't go as planned, right? So I had one that was the deal went south completely, and we lost I lost my investment, and so apart from that too, I've had some capital calls. So obviously the idea is not to be putting more money in later on. It's to be getting money out. So, but to kind of continue to keep that deal afloat. Sometimes that happens, especially over the last couple of years with the huge, quick spike in interest rates that kind of threw valuations off. And if there's not long-term debt on the property, then if they're coming up with a refinance that they need to do, then it could be cash in, and you're not getting money out as I was, a couple of years ago. So it's overall it's been good, but there's definitely been some bumps in the road.
Yeah, and for our listeners, capital calls Tell us about it. What is capital call and why it happens?
Yeah, so capital call is, whatever your initial investment is, if the operator needs more funds at some point, if they don't have that money in reserves, they're going to need to go back to the investors and say, hey, we need 25% of your initial investment. We need you to put that in, and then they should be explaining at that point what they need it for, and communicating that, here's what we're going to do. We need to pay down the loan. We need to buy a rate cap. We need to do, X, Y, Z. So, once you see that, I mean, again, you don't have to necessarily, contribute to the capital call, but, if you don't, you'll be diluted in your ownership share. So, there's kind of pros and cons to each side of it, which, you kind of need to reevaluate where you're at in the deal at that point. So I contributed to some capital calls, but not all, just because, some operators I had more trust in as compared to another one that I did not.
And as you progress with the sponsors, you see how they react, you see how they deal with situation and hurdles, and now you had a better understanding of what is a profile they have, right, of a sponsorship profile, how they actually add in those situations. Because before you got into deal with someone, people can have hundreds of good experience with them, but there are probably like 5 of them buried somewhere that no one really understands that they had some issues, and those issues show up in your case, and now you understand better, okay, maybe next time I'm not going to invest with this person because of how he handles this situation or this situation, and now you understand it better how to develop and grow in the space.
Yeah, I mean, I think you really need to understand where these guys are how they're communicating, and reevaluate what they're doing at this point. If you're seeing those capital calls and the like, so it's a constant process. It's not just set it and forget it. You do want to kind of keep an eye on what's going on, and as best as possible, evaluate over quarter to quarter or year to year to see what's happening.
Yeah. No, absolutely. Okay, so for our listeners who just started their real estate journey, what will be one piece of advice you'd give them to avoid common pitfalls and stay consistent on their journey?
Yeah, I mean, I think whatever avenue of real estate you're going on, if it's syndications, look at a lot of deals. If it's you're trying to fix and flip, look at a lot of houses before you buy one. That'll be one thing. Look at a lot so when there's a good deal. Also, say get educated, read up on what it is. If you're doing short-term rentals, read up on that. Kind of get to know that space. And lastly, I'd say rely on your network. Build that network and reach out to them. I think real estate is a great example in general where people want to, they're happy to share their knowledge and share what works for them, what didn't work. And so, if you have something you're looking at, maybe run it by a few people and see what they think. Make sure that, you're not missing some kind of glaring error.
No, I think you hit a really important point about the numbers. At the end of the day, it's a numbers game. And more you get into the numbers, more you underwrite and look into those deals. Doesn't matter what kind of deal. Is it a short-term or flip, or this is, we're talking about syndication, long-term projections. More deals you analyze, more deals you look at, you get more experience and exposure. I remember when I started my real estate journey, I grew in 2 years to 30 apartments. So we actively buying them and seller financing and other deals that we made. But in my first year, I underwrote 500 deals. And in first year, we closed only on 2 buildings or 3 buildings, like 4 to 6 units. But it helped us because I built all this rapport and understanding. Next year was much easier and faster. Next year I enrolled on like 100 to 200 deals, but I was more targeted in my approach, and it helped me to progress in the space. And I think it's absolutely the most important thing that you need to do. Okay, real quick, we're gonna finish. I know we have a timeline. As you look ahead at 2025, what are your biggest goals in real estate? And how do you see your portfolio evolving in the next few years? Yeah,
I mean, I think I definitely want to, increase my cash flow that I'm getting from the real estate. So, I think that'll be a mix of some syndications. But, as I said, too, looking to do, possibly get into that, short-term rental space. So, that's what I think the future holds for me. And so I think if I could, I'm just going to stay consistent with the space, and, I think I'll get there.
I love it. Greg, it's been an absolute pleasure having you on the show. Your story is inspiring, and I know our listeners will take away so much value from this conversation. If someone wants to connect with you or learn more about your journey, where they can find you?
Yeah, you can find me on Facebook and gbaxmail@gmail. You can reach me there. I'm happy to connect with anybody and look forward to it.
Perfect. So we will drop your socials here in the description and the contact information that you provided. And if people want to talk about syndications, or they want to talk about short sale, or they want to talk about short term, maybe they have a deal for you as a multifamily, as you're looking for deals, and they want to collaborate with you and find out about your experience, I think it's a good idea to talk to you directly and just to build this relationship. Guys, you should understand this is a networking business. Your network is your net worth in real estate. So you have to talk to people. And Greg is open to communications and to meeting new people. And I think it's important for you to get out there and get this contact. Thank you, Greg. Thank you so much for coming out today. I really appreciate you being here with us today.
Thank you as well, Alex. Appreciate it.
Of course. Thank you, Greg. Thank you, Greg. And thank you to all of our listeners for tuning into Path of Progress. Don't forget to subscribe, leave a review, and share this episode with anyone who's ready to start their own path of progress. Until next time, keep moving forward.